If you are over 55 and paying the same insurance premiums you were paying 5 years ago, there is a very good chance you are throwing money away and your insurance company is perfectly happy to let you do it. Here's the thing. Insurance companies are not in the business of calling you up and saying, "Hey, did you know you qualify for a discount?" That is just not how it works. They will gladly take your full price premium month after month, year after year, unless you know what to ask for. And the worst part? Some of these discounts are actually required by law in certain states. That means your insurer is legally obligated to give them to you, but only if you ask. So today we are going to walk through 17 senior discounts that insurance companies hope you never find out about. Whether it is auto, home, or life insurance, there are real savings sitting on the table. All you have to do is pick them up. Let us get into it. Number 1, the Defensive Driving Course Discount. This is one of the biggest discounts out there for seniors, and most people have no idea it exists. If you are 55 or older and you complete an approved defensive driving course, many insurance companies will knock anywhere from 5 to 15% off your auto insurance premium. And here is the kicker. In several states, including New York, Florida, Minnesota, Delaware, and Washington, insurance companies are legally required to offer this discount. In New York, for example, insurers must give you at least a 10% discount for 3 years after completing the course. The courses are usually just 4 to 8 hours. Many of them can be done completely online, and they typically cost between $20 and $100. When you consider the savings over a 3-year period, that is a no-brainer. Once the 3 years are up, you can retake the course and get the discount all over again. Number 2, the low mileage discount. Once you retire, your daily commute disappears, and that means you are driving a lot fewer miles than you used to. But if you have not told your insurance company, they are still charging you as if you were driving the national average, which is around 13,500 miles per year. Most insurers consider anyone driving under 7,500 miles a year a low mileage driver, and they will give you a discount for it. In some cases, this discount can save you $86 a year or more, depending on your provider. All it takes is a phone call to update your annual mileage estimate. Simple as that. Number 3, pay-per-mile insurance. If you are barely driving at all in retirement, maybe just running errands and visiting friends, pay-per-mile insurance could save you a small fortune. Instead of paying a flat premium, you pay a low base rate, usually around $20 to $40 a month, plus a small per-mile charge, typically around 5 to 7 cents per mile. Companies like Allstate, through their MileWise program, and nationwide through Smart Miles, offer this kind of coverage. A senior who drives around 4,000 miles per year could end up paying as little as $53 a month, far less than a traditional policy. If your car spends most of its time parked in the driveway, this is definitely worth looking into. Number 4, the retiree or senior homeowner discount. A lot of people don't realize that being retired can actually save you money on your homeowner's insurance. Why? Because insurance companies know that retirees tend to be home more often. And when you're home, you're more likely to catch a gas leak, a burst pipe, or an electrical problem before it turns into a full-blown disaster. Allstate, for instance, offers retired homeowners over 55 a discount that can be as much as 20% off their home insurance. The Hartford, through their AARP program, offers a retiree credit for policyholders who work fewer than 24 hours a week. Many other insurers offer similar savings, ranging from 5% to 10%. You just have to ask. Number 5, the bundling discount. This one applies to everyone, but seniors especially tend to miss out on it. If you're paying one company for your auto insurance and another for your homeowner's insurance, you're leaving money on the table. Bundling your policies with a single insurer can save you anywhere from 10% to 25% on both policies. Some estimates put the average annual savings from bundling at around $400 to over $600. That's a significant chunk of change, especially on a fixed income. And the best part? You also get the convenience of dealing with just one company for all your coverage. Number 6, the claims-free discount. If you've gone several years without filing an insurance claim, you could qualify for a claims-free discount on both your auto and your homeowner's insurance. Many companies offer savings of up to 20% for policyholders who haven't made a claim in 5 to 10 years. This is one of those discounts that quietly builds up over time. And since seniors tend to be careful, experienced drivers, and diligent homeowners, many of you probably qualify for this right now without even knowing it. Call your insurer and ask specifically about claims-free or accident-free discounts. Number 7, the telematics or safe driving program discount. Telematics programs use a small device or a smartphone app to monitor your actual driving behavior. They track things like speed, braking, and the times of day you drive. If you're a safe, careful driver, these programs can reward you with significant discounts. Progressive's Snapshot program, for instance, can save seniors an additional 10% to 20% beyond standard age-related discounts. Nationwide's Smart Ride program offers up to 40% in savings for safe drivers. And Geico's Drive Easy program also rewards good driving habits. If you're a cautious driver, and most seniors are, signing up for one of these programs is like getting paid for what you already do. Number 8, the AARP membership discount. AARP membership costs just $16 a year, but it can unlock savings across multiple types of insurance. The Hartford partners exclusively with AARP to offer auto and home insurance designed specifically for people over 50. Through this partnership, AARP members can get discounts on auto insurance, a bundling discount of 5% on car insurance, and up to 22% on home insurance when they combine policies, plus access to the retiree credit. AARP also offers discounted life insurance through New York Life, with guaranteed acceptance and no medical exam required. For $16 a year, the potential savings are hard to beat. Number 9, the loyalty discount. If you've been with the same insurance company for several years, you might be eligible for a loyalty discount. Many insurers reward long-term customers with savings of 5% to 10% just for sticking around. Now, here's an important catch. While loyalty discounts are nice, they don't always offset the savings you might find by shopping around. A recent Consumer Reports survey found that policyholders who switched providers saw a median annual savings of $461. So use the loyalty discount as leverage. Either keep it if the price is right, or take your business elsewhere if someone else offers a better deal. Don't stay loyal out of habit if it's costing you more. Number 10, the home security system discount. If you've installed a home security system, smoke detectors, deadbolt locks, or a fire alarm system, you could qualify for a discount on your homeowner's insurance. Insurance companies love anything that reduces the risk of a claim, and security measures do exactly that. This discount varies by insurer, but it can save you a decent percentage on your premium. Allstate, for example, offers a specific discount for homes with security systems. The Hartford does the same. Even something as simple as having a monitored fire alarm can qualify you for savings. If you've already got these protections in place, make sure your insurer knows about them. Number 11, the gated community discount. Here's one that a lot of seniors living in retirement communities don't know about. If your home is in a gated community, whether it's a retirement community or a neighborhood with a homeowners association, some insurance companies will give you a discount on your homeowner's insurance. The reasoning is simple. Gated communities tend to have lower crime rates and more controlled access, which means less risk for the insurer. It's not a universal discount, but it's worth asking about if your neighborhood has a gate or security checkpoint. Number 12, the multi-car discount. If you and your spouse each have a car, or if you have an extra vehicle that you keep for grandkids' visits or weekend trips, insuring all of them under the same policy can lead to a multi-car discount. Geico, for example, offers up to 25% off for insuring multiple vehicles. Even if you're considering dropping one of those vehicles, it's worth running the numbers first. Sometimes, keeping a second car on the policy and getting the multi-car discount ends up costing less per vehicle than insuring just one car alone. Number 13, the vehicle safety feature discount. If your car has modern safety features like airbags, anti-lock brakes, anti-theft devices, or a backup camera, your insurance company should be giving you a discount. Many insurers offer savings for these features because they reduce the likelihood and severity of accidents and theft. A lot of seniors are driving newer vehicles that come loaded with these features, but they never think to mention them to their insurer. If you have purchased or leased a car in the last several years, there is a good chance it qualifies. Ask your agent to do a full review of your vehicle's safety features, and you might be surprised by what discounts apply. Number 14, the good credit discount. This one surprises a lot of people, but in most states, your credit-based insurance score affects how much you pay for both auto and homeowners insurance. Seniors who have a strong credit history often qualify for lower premiums. A higher credit score tells the insurer that you're financially responsible, and they reward that with better rates. If your credit has improved since you first took out your policy, for example, if you paid off your mortgage or your credit cards, it's definitely worth asking your insurer to rerun your credit-based insurance score. The savings can be substantial. Number 15, the affiliation or group discount. Are you a member of a professional organization, an alumni association, or a recreational club? Many insurance companies offer group discounts based on your affiliations. These might include military or veteran status, membership in a teachers association, belonging to a federal employees group, or being part of certain civic organizations. Geico, for example, offers discounts of 12% to 15% for retired government employees, military members, and federal workers. These discounts are often buried deep in the fine print, and insurance companies rarely bring them up unprompted. Go through all of your memberships and affiliations and ask your insurer if any of them qualify you for savings. Number 16, the higher deductible strategy. This isn't exactly a hidden discount, but it's a strategy that many seniors overlook. By raising your deductible, the amount you pay out of pocket before insurance kicks in, you can significantly lower your monthly premium. For example, going from a $500 deductible to a $1,000 deductible on your homeowners or auto policy can reduce your premium noticeably. The key is to make sure you have enough in savings to cover the higher deductible if something does happen. For seniors with a healthy emergency fund, this can be a very effective way to keep premiums low while still maintaining solid coverage. Number 17, the annual policy review. This might be the most important one on the entire list. Your insurance needs change over time, and if you haven't reviewed your policies in the past year, you could be paying for coverage you no longer need. Maybe your home's value has changed. Maybe you've downsized. Maybe you sold a car or stopped driving long distances. Maybe you've added safety features or a security system. All of these changes can affect your premium, but only if your insurer knows about them. Make it a habit to sit down once a year and go through your policies line by line. Ask your agent about every possible discount. Insurance companies count on the fact that most people set their policy and forget about it. Don't be one of those people. Look, insurance is one of those things that nobody really enjoys thinking about. But when you're on a fixed income, every dollar counts. And the reality is, there are hundreds, sometimes thousands of dollars in savings just waiting to be claimed. All you have to do is pick up the phone and start asking questions. This channel is all about sharing practical, no-nonsense tips that help you hold on to more of your hard-earned money. We're always digging up ideas like these, so if you found this video helpful, go ahead and subscribe so you don't miss the next one. Your bank account will thank you for it.